What's up everybody, it's Menenga, and let's talk about making you some serious cash in the market. Alright, so you're interested in trading? Good for you. But you gotta know what you're doing, or you're gonna get eaten alive out there. That's why, today, I'm gonna be breaking down 6 candlestick patterns that'll take your trading game from 0 to 100 real quick. Stay tuned, because this information is absolute gold. Alright, let's do this. First up, we've got the shrinking candle pattern. It's pretty self-explanatory. You're looking for 3 red candles in a row, each one smaller than the last. Think of it like this. The sellers are getting tired. They're not as aggressive. That's why the candles are shrinking. Now here's the key. You don't want to jump in right away. Wait for that next green candle to close above the previous red one. That's your signal that the buyers might be back in control. Now, you're not just gonna YOLO your life savings into this trade, right? You need a plan. Set your stop loss at the low of that third red candle. That way, if things go south, you're out with minimal damage. And for your take profit, aim for 1.5 to 2 times your risk. Remember, trading is all about managing risk and protecting your capital. Don't get greedy. Alright, next up is the engulfing candle pattern. This one's a classic, and for good reason. It's a strong signal that the market might be about to shift. What you're looking for here is a big green candle that completely engulfs the previous red candle. It's like the buyers just came in and said, nope, we're in charge now. And when you see that kind of decisive action, you want to pay attention. The buy signal here is pretty straightforward. You buy at the close of that engulfing green candle. For your stop loss, keep it simple. Just set it below the low of that red candle that got engulfed. And for your take profit, again, 1.5 to 2 times your risk is a solid target. Remember, we're not trying to get rich quick here. We're playing the long game, building consistent profits over time. Now let's talk about the pin bar candle. This one's a personal favorite of mine because it's like a sneak peek into the minds of the traders who are losing money. Imagine this. A bunch of sellers pile into a trade thinking the price is going down. But then, all of a sudden, the buyers step in and drive the price back up. That's what a pin bar looks like. A long wick sticking out like a sore thumb, showing you where the sellers got trapped. Now, the buy signal for the bullish pin bar isn't on the pin bar itself. Instead, you wait for the next green candle to close higher than the pin bar's close. That's your confirmation that the buyers are really in control. Where do you put your stop loss? Below the low of that pin bar, where all those sellers got burned. And your take profit? You know the drill. 1.5 to 2 times your risk. Chapter 4. Alright, moving on to the 3-bar continuation pattern. This one's all about momentum. You're looking for 3 candles that tell a story of buyers flexing their muscles. It starts with a big green candle, showing strong buying pressure. Then you get a small red candle. This isn't necessarily a bad thing. It just shows that the buyers took a breather, maybe to catch their breath before the next leg up. And that's where the 3rd candle comes in. Another green candle, ideally bigger than that little red one. That's your signal that the buyers are back in the driver's seat, and you want to be along for the ride. Your entry point for this pattern is on that 3rd green candle, right when the buyers are starting to push the price higher. Set your stop loss below the low of that 2nd candle, that little red one. And for your take profit, you guessed it, 1.5 times to 2 times your risk. Chapter 5. Let's talk about the 3-bar reversal pattern. This one's all about spotting when the market's about to do a complete 180. You start with a red candle. Not huge, but definitely not tiny either. Then you get a smaller red candle. The sellers are losing steam. Finally, you get a big green candle that closes above the high of the first red candle. That, my friends, is a sign that the buyers have wrestled control from the sellers, and they're not messing around. The buy signal here is on that 3rd candle, that powerful green one that signals the reversal. Place your stop loss below the low of the 2nd candle, that little red one that showed the sellers were getting tired. And for your take profit, you know it by now, 1.5 times to 2 times your risk. Chapter 6. Finally, let's talk about breakout patterns. This one's a little different from the others, but it can be just as powerful. It's all about identifying those moments when the price is about to explode out of a tight range. Picture this. You've got a series of candles with small bodies and wicks all clustered together. It's like the market is holding its breath, building up energy for the next big move. Then boom! You get a large red candle with a small body and a tiny wick. That's the breakout candle, and it's telling you that the sellers are exhausted. Now you don't actually buy on that breakout candle, instead, you wait for the market to confirm the breakout. How do you confirm it? Look for multiple candles with small wicks and bodies to appear after the breakout candle. That's your signal that the buyers are in control, and the breakout is real. Now, for your entry, you want to buy above the high of those confirmation candles. Set your stop loss below the low of those confirmation candles, and aim for a take profit of at least 1.5 times to 2 times your risk. Listen, these candlestick patterns are like having X-ray vision for the market. But just like with X-ray vision, you don't want to rely on them alone. Think of these patterns as one tool in your trading toolbox. To really up your game, you've got to combine them with other indicators and strategies. Things like key levels, Fibonacci retracements, breakout confirmations, double candlestick patterns, and the 100 EMA. Put it all together, and you've got a recipe for consistent profits in the market. Remember, trading is a marathon, not a sprint. So be patient, be disciplined, and never stop learning. And as always, happy trading. Remember, candlestick patterns are most effective when used in conjunction with other technical analysis tools and indicators. Combine these patterns with key levels, Fibonacci retracements, breakout confirmations, double candlestick patterns, and the 100 EMA for the best results. Happy trading!